Now let's look at India's stock markets. Yesterday we saw a bloodbath. The markets saw their worst fall in 4 years since the Wuhan virus pandemic. Yesterday was the worst. But today it seems like the markets were in recovery mode. Investors have begun picking up the pieces. And they posted a decent upswing today. The Nifty ended at over 22,600. It rose by more than 3%. The Sensex saw a similar recovery. It ended the trading day at over 74,300. Again, more than 3% up. Now, as the name suggests, the Nifty 50 tracks 50 major companies. Yesterday, 42 out of these 50 companies saw their share prices fall. Today, all 50 companies saw gains, and the market optimism was seen across industries. Bank stocks were up, both private and public sector banks. They saw a recovery. The auto sector is in fact doing better than it was doing on Monday. That was before the results. Monday saw record gains on the markets. Today, the auto sector was doing better than that. The pharma sector also got a shot in the arm. IT stocks have almost made a full recovery. And yesterday's loan saving grace, the FMCG sector, was up by more than 4% today. So everywhere you look, the recovery is underway. What does all of this mean? Is the economy back on track after a 24-hour meltdown? Well, not really, because nothing actually happened to any of these companies. And we said this yesterday too. Nothing had changed in the inner workings of Indian firms. The election results have nothing to do with how many cars came out of an assembly line or how many got sold. So yesterday was not about economic fundamentals or performance. Yesterday was about sentiment, about fear. Investors were afraid that the government might change, meaning an end to the continuity of the current economic policies which have been in place for a decade now. The fear is that the BJP might dial down on infrastructure spending, for instance, to appease rural voters. For the last 10 years, the government has been focused on infrastructure and manufacturing. But these projects come at a cost, a political cost with rural voters. They are the ones usually displaced when a new highway is built or a new factory is set up. So the fear is that the BJP will hold off on new projects. And that fear is what brought the markets crashing down yesterday, even though the companies themselves had done nothing wrong. But today that fear has started to recede. Analysts predict that India's growth trajectory will not be derailed. The next budget will be out in July. Until then, it will be business as usual. So this helped reduce the fear, as did news of today's alliance talks. The next NDA government is already in the works. Their swearing-in ceremony is scheduled for this Saturday. All of this points to business as usual. So if everything seems normal, why did the markets react the way they did yesterday? Why not just wait for the final results before selling? Why get caught in a frenzy? Well, because the markets are not always logical. They fluctuate based on emotions. For investors, yesterday was about fear. Today was about hope. The hope for economic stability and continuity. And the markets have responded to these basic human emotions.
Firstpost reports from the world's second largest continent.
Hello, I'm Alison Lagrange. A very warm welcome from Durban, South Africa.
We get you the news and the newsmakers from Africa. From elections to climate change to innovations and opportunities. As the world's attention shifts, we report from Africa, the heart of the global South.
Join me every weekday live on Firstpost.